Ladies and gentlemen, good day and welcome to Gulshan Polyols Limited Q2 FY23 earnings conference call hosted by InCred Equities. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nitin Awasthi from InCred Equities. Thank you and over to you, sir.
Thank you, Seema. On behalf of InCred Equities, we welcome everyone to the 2Q FY23 earnings call of Gulshan Polyols. At this point, we would like to thank the management of Gulshan Polyols for giving us the opportunity to host them. From the management today, we have Mrs. Aditi Pasaria, Joint MD, Mrs. Arushi Jain, Joint MD, and Mr. Rajiv Gupta, the CFO. Before I hand it over to the management to begin the conference, I would like to read out a cautionary statement. The conference call may contain forward-looking statements about the company, which are based on beliefs, opinions, and expectations of the company as on date of this call. These statements are not guarantees of future performance and involve risks and uncertainties that are difficult to predict. Actual results may differ from such expectations, projections, whether expressed or implied. Participants are requested to express caution while referring to such statements and remarks. With that, I'll hand it over to the management. Over to you, sir and ma'am.
Good evening, everyone. On behalf of the management of Gulshan Polyols Limited, myself, Aditi Pasari, along with Arushi Jain, JMD, and CFO Rajiv Gupta, I would like to thank you all for attending our maiden earnings call for H1 and Q2 FY23. We would like to begin with a brief introduction and journey about Gulshan Polyols Limited. The group was established in 1981 and Gulshan has completed more than 40 years in the industry. We are India's leading manufacturers of specialty-based chemicals as well as manufacturers of ethanol and biofuel, with a global presence in 35 countries across various continents. We started our journey as Gulshan Sugar and Chemicals with a primary business of manufacturing calcium carbonate and gradually expanded into a multi-product manufacturing company engaged in the manufacturing of ethanol, specialty chemicals like sorbitol, starch, starch derivatives, and various grades of calcium carbonate and on-site PCC plants. We crossed the milestone of 1,000 crore revenue in FY22, and today we are looking at doubling our revenue by FY24, driven by our big expansion program. Talking about the financial highlights, in Q2 of FY23, our income from operations stood at 277.38 crores. It remains stable due to peak utilization of our capacity owing to robust demand for all our products. The input costs have increased by 13.2% as compared to the same period YOY, considering the unprecedented rise in basic raw material cost and power cost. The EBITDA for the quarter was at 20 crores, at about 7.3%. Net profit for the quarter stood at 9 crores, and the PAT margins were at about 3.3%. In H1 of FY23, our revenue stands at 548 crores, a marginal increase of 6% over the year. EBITDA stands at 42 crores at 7.7%. The net profit at 19.2 crores at about 3.5%. Thank you, everyone, and now I will hand over the call to Mr. Nitin.
Before we open the call up for Q&A, for the benefit of the participants, could you also highlight the capacities of your current segments and how are they going to augment in the future? What are the expansion plans? And because there are major expansion plans, which should be known because you are looking at substantial increase in revenue over the next 2-3 years. So what are those plans and with timelines on different segments?
Sure, Nitin. So our business portfolio broadly spans across 3 business segments. First is the grain processing segment, third is the biofuel or distillery segment, and third is the mineral processing segment. I will start with the grain processing segment. This segment mainly comprises of products such as sorbitol, maize starch, liquid glucose, fructose syrup, other starch derivatives like maltodextrin, dextrose monohydrate, and agro-based animal feed. So we currently, our capacities are based across two locations. One is in Muzaffarnagar, Uttar Pradesh, and the other being in Gujarat, in Bharuch. In Gujarat, we are currently manufacturing sorbitol, which we have a capacity of 72,000 metric ton per annum. And at Muzaffarnagar, we are producing maize starch at a capacity of 70,000 metric ton per annum. We are also producing fructose syrup, which has a capacity of about 36,000 metric ton per annum. So all put together, our combined capacities in the grain processing segment are about 150,000 metric ton per annum, which we are looking at expanding by about 20% in the coming year. You see, all our products are currently, our facilities are currently running at 100% capacity utilization. Therefore, it is organic for us to increase our capacity, as there is a demand for all the products in the market, domestic as well as export. Coming to the next segment, I'd also like to briefly talk about the customer base. We have a very sound customer base in this segment. For sorbitol, we supply to mostly FMCG. It goes in the oral care industry. Lever, Dabur, Asian Paints, Patanjali, they're all our esteemed customers. We also export to more than 35 countries. Regarding starch, starch is mainly used in the semi-craft paper industry. And with the whole robust demand in the e-commerce segment and the rise in corrugated demand for packaging and corrugated boxes, it is just organic for us to experience a robust demand in starch paper as well, because it goes in the semi-craft paper industry. Our plant is at 100% capacity utilization, and we are able to sell our entire product within 100 kilometers of our facility, being in the paper belt of Muzaffarnagar, which is surrounded by paper mills. Fructose syrup is also a sweetener. It is currently being used in the beverage segment, and we are one of the largest in this segment in the country. Coming to the next segment, which is the ethanol and distillery segment. Currently, we have a 60 KLPD grain-based ethanol plant as well as distillery in Madhya Pradesh, Chhindwara. Currently, our distillery is running at 110% capacity utilization. This was set up in 2020, and by expansion, looking at the EBPP program of the government and having faith in the whole blending program of petroleum with ethanol, we actually are looking at a big capacity enhancement from 60 to 500 KLPD, and this plant should be operational by Q4 of the current financial year. Subsequently, we are also setting up another plant for ethanol, the grain-based ethanol in Assam, with a capacity of 250 KLPD. This is going to be in Assam in Golpara. This should be ready by FY23. Our third major segment is minerals processing segment. This is actually in this segment are various grades of calcium carbonate and on-site PCC plants. It is a small segment, but with good contribution. So various grades of calcium carbonate, like precipitated calcium carbonate, ground calcium carbonate, this mainly goes in the industry and also the PVC industry. So that is majorly about the business segments.
Okay, thank you, ma'am. Got it. Seema, can we open the floor for question and answers?
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. We take the first question from the line of Mr. Rahul Singhal. Please go ahead, sir.
Yes, ma'am. Can you just disclose what is the revenue contribution of mineral segment and the green segment, and for this quarter one, for quarter two?
Hello, management. Hello, management members.
Okay. Yeah, please.
Yes, sir.
Can I go ahead? Can I answer the question now?
Yes, sir, please.
Audible now?
Yes, sir, you're audible.
The question was relating to the segment-wise revenue for the quarter. So, the ethanol segment has given us a revenue of 45.48 crores. Grain processing business has given us a revenue of 207 crores. And then business processing segment has given us a revenue of 24 crores. The total comes to 276 crores. Hello?
Yes.
Am I answered your question?
Yes, Rajesh ji, if it is possible, can you just disclose the EBITDA margin from grain and mineral base and how they are affecting, and how the margins are affected with the, specifically the mineral segment, how the margins are affected by the cost of power and coal, which has gone up?
I'd like to answer that. So the coal prices have gone up by 70% YOY, and the raw material prices have gone up by 40% YOY. Both has led to a decline in the EBITDA margin in the grain processing segment as well as the distillery segment. Because in the grain processing, our main raw material is grain, which is maize and rice, and because of the rise in raw material prices, we have seen a major decline in the EBITDA margins in both the segments. Because both the segments' major raw material is grain, and the second other input cost is coal. Because all the plants are run. We have a cogen power plant, which are run on coal.
Okay. Thank you, ma'am. Thank you for the call. Thank you for the answer.
Thank you very much. We take the next question from the line of Mr. Munjal Shah, individual investor. Please go ahead.
Hello.
Yeah, please.
Yeah, am I audible?
Yes.
Yeah.
Good afternoon, management. So I have a couple of questions. The first is, ma'am, can you let us know what will be the date of commercialization for the grain-based capacity expansion?
Hi, good afternoon. This is Arushi Jain. So you're asking about capacity expansion for ethanol?
Not for ethanol, for the grain base. So basically for the starch and fructose syrup. So basically we are expanding by 20%.
So we can look at it by early next year.
So can we say Q1 FY24?
Yes.
Okay. And ma'am, you have been mentioning that we will be focusing on higher margin products with this capacity expansion in place. So which products exactly we are talking about?
So we are looking at increasing capacity in sorbitol, starch as well as fructose syrup. All these products are higher margin products, and we also plan to introduce more starch derivatives like dextrose monohydrate maltodextrin. And yes, hopefully they will be contributing to better margins.
Okay, thank you. And our last question. In the press release, you have mentioned that from the second half FY23, we might look at EBITDA margins of close to 10 to 12% basis raw material price softening from here on. So, ma'am, once the capacity expansion of grain processing and ethanol is in place, do we see increasing margins from about 10 to 12%, or will sustain around 10 to 12% going forward?
You see, I'd like to answer that. Our company is a mixed basket of products, and sometimes some segment gets affected, some pricing gets affected. But an year average over many years, we like to stay within profitability of EBIT margin of 10 to 12%.
Okay, so we can consider those margins as sustainable margins going forward,
yes,
right?
Yes, this is our target always, and we have been able to deliver that and hope to continue so.
Okay. I would also like to add that this year has been an extremely challenging year for the grain processing segment because of extraordinary rise in grain prices as well as coal prices, also owing to the Russian-Ukraine war, which has had a huge global impact on both these commodities. So last 2 quarters have been exceptionally challenging for the company. But yes, going forward, once these situations are combated, 10 to 12% we see as sustainable margins.
Okay, thank you. I'll get back into the queue. Thank you for your answers. Thank you.
Thank you very much. We take the next question from the line of Jineet Babla from Babla Wealth. Please go ahead, sir.
Hello.
Yes.
Am I audible?
Yes.
Yes. We have noticed that the margins have been impacted. So just wanted to ask that what are the cost headwinds impacted the margin?
Sorry, can you come again, please?
The margins have been impacted, right? So what are the cost headwinds that have impacted the margins?
As we mentioned earlier, it is the main 2 major costs which have impacted the margin. One is the raw material cost, and our main raw material is grain, which is rice as well as maize, and there has been exponential rise in the prices of both these grains, which have impacted our margins. And second major cost for the company and for these divisions is coal, as we have our own cogen power plants, and coal is the main fuel for our power plant. The rise in the price of coal has also led to reducing and shrinking the margins.
Okay. And I just wanted to ask one more question, that when will the ethanol plants will move to their optimum capacity utilization after the capex happens?
So we are expecting the plant to get commissioned by the 4th quarter of current financial year, and FY24 we should be looking at optimum utilization of our capex for the 500 KLPD plant.
Okay. I just have one more question. Can you just highlight how to, just provide the locations of advantages and challenges we are facing currently as of now?
For locational advantages for ethanol, is that what you're asking about?
Yes.
Okay, so ethanol plant, we have 2 plants. The capacity is coming up in 2 locations. One is in Madhya Pradesh, and it's like 0 miles. It's like absolute center of our country. Okay, it's a grain-rich area and centrally located in the country for convenient distribution of ethanol. And there is a raw material procurement pricing advantage there for sure. And that makes it logistically and locationally very economically sensible, favorable. It makes it very favorable. Now, for Northeast, the second plant is upcoming in Assam. Okay, so there also there is abundance of rice, and the raw material is abundantly available, and ethanol is in extreme shortage. And so we see both as a very favorable advantage in choice of locations.
Right. Thank you so much. Thank you so much.
You're welcome.
Thank you. We take the next question from the line of Shruti Iyer from BNP Paribas. Please go ahead. Ms. Shruti, your line is in talk mode. Please go ahead with your question.
Hello, am I audible now?
Yeah.
Okay. Good evening, all. In relation with the previous statement, I just wanted to understand, are our plants entirely dependent on, coal for energy, or do we have any substitutes or alternates for the same? And if yes, then please highlight, what steps are we taking to control costs?
So of course we use alternate fuels like paddy husk, But you see, which are all the alternate fuels have gone up in prices at the same proportion which coal has gone up. Today, if I'm saying coal has gone up by 70%, the alternate fuel, which is paddy husk for our plant, has gone up by 107%. So you see, all substitutes have gone up in the same proportion or even higher probably. So it is very difficult for us to actually control this cost until the coal prices start softening. Only then even the substitutes will start softening, because the pressure falls on the alternate fuels. It is not that we are the only one who are actually suffering because of coal price. All the mills who are using coal were suffering, and everybody had to shift to alternate options, and the price of which went up subsequently or even higher. So going forward, yeah, we have definitely made some arrangements. We have actually created an option where all our power plants are multi-fuel boilers. So we can now, our dependency on only one fuel has been eliminated. We are able to use multiple fuels, whether it is paddy husk or it is Indonesian coal or steam coal, or even bamboo actually going forward in Assam. So we are making our boilers multi-fuel, but the fact is that all the fuels, the prices have gone up at the same level.
Okay, understood. Just one more question. Currently, what are our R&D capabilities, and how many products are we developing in a year as of now?
So R&D capabilities we do on improving efficiencies and quality of our current products. Okay, so and we are also studying new products, So we have a full-fledged lab in every plant, okay, which determines the quality of raw materials and quality of process and quality of finished goods. And in terms of development of products, so these are very serious advanced products. While our laboratories are very capable of doing all of them, it's a very slow procedure. So we do it slowly. We study the project, and it is not like we're ultimately not a FMCG or a fashion company who will produce new products every now and then. So, but our labs and R&Ds are very much in place for the products that we, the line of industry that we are in, ma'am.
Okay. Okay, I think that's all.
One more thing to that. In fact, every time we choose a new product, we make sure it is an import substitute. That is our basic philosophy of choosing a new product. We always like to go for products which are not being currently manufactured in the country. We always choose a product which is being imported into the country, so that we have an advantage over there, a technological advantage here. Whether it was sorbitol back in 2000 or adding fructose, all products were actually import substitutes, They were only being imported into the country, and we were one of the first manufacturers. So this actually becomes a major reason why we choose a product. And of course, you can imagine the kind of R&D which goes behind it before we are able to come up with a manufacturing facility in the country for these products.
Right. Thank you, ma'am. Thank you for answering the question. That's all from my end.
You're welcome.
Thank you. We take the next question from the line of Darshil Zaveri from Crown Capital. Please go ahead.
Hi, thank you so much for taking my question. So I just wanted to know how much total capex are we spending for both the facilities as well as the crane?
So I'll go facility by facility. For the 500 KLPD plant in Madhya Pradesh for ethanol, we are looking at a total capex of 300 crores. For our 250 KLPD plants Assam, we are looking at a total capex of 200 crores. And for the grain processing expansion, we are looking at a capex of about 100 crores. So all put together, about 600 crores of capex, in total.
And so how much of it would be spent currently? We would have major MP and grain processing plant, major chunk would have been spent as they are nearing completion, right? So how much would be the pending outflow that we would be doing?
Your voice is not audible.
Hello, can you hear me, sir? Hello? Hello, am I audible?
Yes, Mr. Zaveri, please go ahead with your question.
Yeah, so I was just asking, sir, from the 600 crores capex that we're doing, how much have we already spent and how much is pending?
250 crore we have already spent, and 350 crore is the balance we need to spend in the next 1 year.
Okay. And I also just wanted to know, so this year we might have some flattish revenue. The growth should kick in by FY24 with the new plant. Would that be a fair assumption?
Yeah, that is a fair assumption.
Yeah. Okay, thank you so much. That answers my question. All the best, team. Thank you so much for answering the questions.
Thank you very much. We take the next question from the line of Mr. Anil Kitara, individual investor. Please go ahead, sir.
Yeah. Hello. Yeah. My a couple of questions. My first question is, in this last 2 quarters, your EBIT from the ethanol segment is negative, despite more than 100% utilization. So I was a little surprised that EBIT negative, even with the increased prices, because the last quarter there was an increase which was given in the form of incentive. If in the form of incentive also is resulting into a negative EBIT, and now it is only a marginal increase done by the government. So then, what sort of EBITDA we are looking at from ethanol segment? Because the last 2 quarters have been EBIT negative. This was my first question.
Yeah. So, you see, as we said in the beginning of this call, that the kind of rise in the grain prices and coal prices which we haven't seen in last 2 quarters is unprecedented. It is something we have never seen in the history of grain. We have bought coal that we used to buy at 6,000 rupees a metric ton, but we will have bought at 12,000 rupees a metric ton. So these are the prices which are unprecedented circumstances and situations. And we have it in the grain processing industry from the past 22 years. So we understand that such quarters can arise, but that does not mean that they will stay forever, because coal has to soften, agro has to soften, the volatility has to come in, it can go up, it can go down. We have to work on average margins. Last 2 quarters was very challenging, but that does not mean that it is going to remain like this forever. We were already suspecting softening of grain prices in the 3rd quarter, which has started happening. Also, as you may be aware, that the government has banned export of broken rice, which has definitely given us some relief on the grain procurement side. Also, some softening of the coal prices have already started. So, yeah, we are expecting Q3 to be much better, and we are really hopeful that the worst is behind us. But you see, it is times like these which test strong players in industry, which test the sustainability of a person and people who can stand straight with these kind of fluctuations. So, in fact, it is a very it is something good which has happened, that the multiple capacities which are coming up in the country for the grain processing ethanol segment will definitely rethink will definitely rethink whether they have the capacity and capability to sustain these kind of volatilities.
With this, because otherwise the ethanol blending program of the government, which talks of 10% coming from grain, it will not be sustainable, because the grain with this sort of prices is not viable. So my question is, another question is that what is the likelihood, with the softening of prices of the broken rice and the coal prices softening, what is the likelihood of per liter EBITDA which we are talking for 23-24? Is it going to be 7-8 rupees a liter, or it is going to be even lower than that?
See, going ahead, we have been saying about 10% EBITDA margin should be a sustainable margin, which is about 5 to 6 rupees liter of ethanol.
That's 5 to 6 rupees, okay.
Yes, I would say these are sustainable margins.
Mm-hmm. Okay. Another question was your 600 crore capex. This ethanol would be, both the projects would be under interest subvention, and the rest is, how much is internal accruals out of the 600 crores which is going to be funded, or is there, how much is the debt and how much is internal accruals for the 600 crores?
So for the 300 crore capex in MP, we have taken a term loan of 175 crores. from HSBC, and for Assam, we are planning to take a loan of another 175 crores. We're already in dialogue with SBI, and we should be able to close something very soon. So all put together, about 350 crores will be from debt. We had also done some fundraising through the QIP mode of about 78 crores in the beginning of this year. That will also contribute to our capex plans, and rest will be from internal accruals.
Okay. So, okay. So my point, another point was that your latest starch, that is a product which has tremendous potential, because most of the players have been able to pass on the elevated cost to the customers. But probably your latest starch, you should probably be doing much more expansion, because that is a product where this, the potential is even higher.
Your question is, you're asking about native starch?
Yes, yes.
You're saying that the cost of production has become higher.
No, I'm saying your latest starch, the capacity can be even more enhanced, because native starch is a product where the potential is extremely high, and you can easily pass on the increase in cost to the customers, which other players have also done.
Yes, correct. Your observation is bang on. That's right.
Yeah, you're correct, and we are actually looking at increasing the capacity for starch, because starch does offer you dynamic pricing, and the prices are not valid for more than 30 days, which gives us the opportunity to pass on the price increase.
But in sorbitol also you have been able to pass on, or no?
The sorbitol we have, because of the customer base we have, like Dabur, Asian Paints, Patanjali, Lever, we have 3 to 6 months contract with them, So which, of course, in the past 20 years has played out very well. But last 1 year, when the grain prices has gone up unprecedentedly, it has, of course, the pass on has not been that smooth.
Okay.
And we have
so
to absorb some the margin shrinkage.
Okay. The last point is there any likelihood of any accretion coming in the last quarter from ethanol for new expansion? Is it going to be the end of the quarter, last quarter, or it is a mid-quarter? So some accretion happening in the last quarter, or no?
In the last quarter, we would be trying to commission the plant, so I can't assure you it's a very thin margin, so we were expecting the plant to come in production by end of January. The trials, we'd like to have the plants up and running, but I'm not sure how much of production we'd like to promise.
So it is going to be the next year only, next time.
Yeah. Better to assume that way, yes.
Okay, thank you so much.
Thanks a lot, Mr. Pitara.
Okay.
Thank you. A reminder to all the participants, anyone who wishes to ask a question may press star and 1 on the touchtone telephone. We take the next question from the line of Mr. Rishabh from Anant Investments. Please go ahead, sir. Mr. Rishabh, your line is unmuted, sir. Please go ahead with your question.
Yeah. Hello, am I audible now?
Yes, we can hear you.
Yeah, so Rishabh here. Good evening. So I do have a couple of questions regarding the average selling price of our 3 products. So we have witnessed an increase in the same due to cost headwind. So and the second thing is, are we able to pass the cost to the customers? What is your take on this?
Rishabh, let me repeat the question as I understand. You're asking us that there is an escalation in cost, and are we able to pass on the cost to the customers? Is that your question?
Yes, exactly.
Okay. So we are, a mixed basket of products, and we have long-term contract products, then we have medium-term contract products, and we have short-term contract products. So wherever we have short-term contract products, we are definitely immediately able to pass on the cost. There is no doubt in that. And the other medium term, when the time comes, yes, we are able to recover. And the long-term contracts also, when the time comes, yes, that does happen, but it does not happen instantly. Yes, but wherever there is short-term contract, we are able to pass on the price, the cost element immediately.
Okay, ma'am. Ma'am, one more question from my end. So, who is the EPC player executing the capex plan?
Sorry, can you please repeat that, Rishabh?
Who is the EPC player executing the capex plan?
EPC player?
Yeah.
we have in our new capacities, in our expansion. So we have engaged multiple companies for their expertise. We have turbine from Siemens. We have like the distillation plant is from Green Excel, and then the silo, the unloading system is from different contractor, and so on. So we take, and some of the equipments we import from China, and so we have our in-house team. This project is. In-house team is pretty good, and we are able to put together with our key engineering partner being the Green Excel. That's good.
Okay, ma'am. Thanks. I'm done with my questions. I have. It's fine. No problem. Fine. Thank you.
You're welcome.
Yeah.
Thank you. We take the next question from the line of Shruti Iyer from BNP Paribas. Please go ahead.
Hello. Hi, ma'am. It's Shruti again. So my first question is that we are competing with the sugar companies. So I wanted to know, do we have benefit over them? Because on the ethanol segment, they are. So on the ethanol segment, I wanted to know what benefits do we have?
So, okay, so I'll tell you, at the face of it, when you read the contract, okay, so sugarcane pricing for an OMC, when they buy a sugarcane-based ethanol, it costs 65 rupees, the B-heavy molasses costs 60 rupees. And grain-based ethanol costs between 55 and 58 rupees. So do you see that inherent advantage to the grain-based distilleries? You see, because we are selling cheaper ethanol to the OMCs. Please understand that, right? So as soon as grain-based ethanol is available in plenty, it's a natural shift for OMCs to prioritize the grain-based ethanol. Okay, and as far as the production cost and parity of EBIT margins are concerned, you see there are right now at this moment grain-based ethanol units may not look the best because we are under pressure of fuel and raw material, but I don't believe that's a sustainable pressure, but we do have a definite and distinct advantage in terms of pricing itself. It's only economically viable to produce from grain to ethanol from grain for the OMCs to buy grain-based ethanol than to buy sugarcane juice-based ethanol, because this is incentivized, I would say.
Okay.
Your question?
Okay. Yes, ma'am. Thank you.
Yeah. Okay, you're welcome.
Yeah.
Thank you. We take the next question from the line of Mr. Aditya from Securities Investment Management Company. Please go ahead.
Hi, ma'am. Thanks for the opportunity. Ma'am, just wanted to know what has been the year-on-year increase in maize prices?
Can you please repeat your question?
What has been the year-on-year increase in maize prices?
Year-on-year increase in
maize prices.
Maize prices, that's all over the index. It's gone up very significantly. Yes. So yeah, it is actually in percentage terms, it has gone up by 40% YOY. And in absolute terms, we can say something like from 18 rupees to 25 rupees per kg.
Okay. And you had mentioned that you enter into a long-term and short-term contracts. So just wanted to know what is the proportion of these contracts in a revenue? What percentage will be long-term? What percentage will be short-term?
For our products, for our end products?
Yes.
See, now all depends on a multi-product company, so it is very difficult for me to actually bifurcate each of the products and their contract, the nature of contract, that will, on the call, it will not be possible for me to give out those delicate and minuscule numbers there.
Right. And what percentage of exports in a revenue?
About 10%.
10%. And ma'am, just wanted to know about this exports. What is the opportunity over there? Are we looking to increase the share over there?
Yes, we are looking at increasing exports. So currently we are exporting sorbitol to 35 countries. And with the increased capacity of sorbitol, which we are looking at increasing exports as well.
Right. And what is the price differential in maize for India and international maize prices currently?
Can you repeat this question?
Hello, am I audible?
Yeah, can you please repeat this question? Sorry, can you please repeat it?
Yeah, so what is the current price differential between Indian maize prices and international maize prices?
International maize prices and Indian maize prices.
Yeah.
I'll have to look that up. I'll have to look that up.
No, so I just wanted to understand if the Indian maize prices are lower, then our export opportunity is higher or something like that?
Yeah, we are lower. If I can answer that question, then we are lower.
Okay.
Actually, I just want to tell you that because Ukraine was one of the major exporter in maize, because of this war and all, the prices have been shoot up like anything. So domestically, procurement of maize is cheaper than from globally.
Domestic, of course, the prices are cheaper as compared to internationally, and that is the reason why the government is exporting a huge amount of grain to the other countries. You know, Ukraine was the grain bowl of the world, and with Ukraine closing down, it has had a huge impact on international grain prices. You know, last week, Russia had a pact. There was in the news that Russia had a pact with Ukraine where it would allow exports of grain to the Black Sea, and this one news actually softened the grain price globally as well as in India. And just after 3 or 4 days, it withdrew a statement, and that again led to the increase in price. So you can imagine what a huge impact Ukraine war has had on the grain prices globally. And as currently, because we are a grain processing country, so definitely we have an advantage of grain prices over the world, and that is the reason why we are also exporting. Thank you.
Right, and if not for the Ukraine war, historically, how have the prices fared between India and internationally? Pre-COVID and pre-Ukraine war?
India was always priced lower than international maize price.
Right. Okay. And I just wanted to know more about your procurement strategy for maize. So, do we procure maize just once a year, or we continuously procure after every 2 to 3 months? How is the procurement done?
We continuously procure grains. In fact, we do like an SIP. So we have to make sure that we are procuring a certain amount of grain every month, every week, every day, and average out the pricing. It is just 1 or 2 months in a year when we are expecting a new crop to come in. We will stock down and wait for the new crop to come in. But 10 months of the year, we are buying it like an SIP.
Right. Okay. Right. That was all from my side. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address all the questions from the participants in the conference, please limit your question to 1 per participant. Should you have a follow-up question, we request you to rejoin the queue. We take the next question from the line of Mr. Varun M. from Starniva Capital. Please go ahead.
Thank you for the opportunity. So, in the previous presentations, we have given a guidance of around 2,300 crores for financial year 24. So, can you give us a likely or approximate percentage-wise contribution from our different business segments?
So currently, you see, from the ethanol segment, our revenue contribution is about 20%. But going forward, with the new capacity in the grain processing ethanol coming up, our contribution from the ethanol segment will be 50%.
Okay.
So 50% will be from grain, from grain, 50% from ethanol, and very minuscule, about 3 or 4% will be less from mineral.
Okay. So the 20% expansion which we are doing with the grain processing segment, will it be a brownfield or a greenfield segment? The brownfield or a greenfield expansion. And I also wanted to know your growth projections for the grain-based division specifically, like what is the outlook in a 2 to 3 year time frame?
It is brownfield. We are expanding our current capacities only. So it is totally brownfield expansion. And we could be looking at upside of about 25% on the revenue side by FY24.
Okay, that's all from my side. Thank you.
Thank you.
Thank you, sir. We take the next question from the line of Mr. Nagesh K, individual investor. Please go ahead, sir.
Good evening, madam.
Good evening.
You are into exports, so definitely you will be having foreign exchange earnings. I would like to know whether you are covering any forward contracts or just keeping it plain and taking the advantage of the depreciation of the rupee.
I would like to answer this because actually our exports, we have equally imports also. We are also doing imports. So there is a natural hedge, but we don't do any hedging of our exports because it's import and export both compensate each other. And secondly, it's the customers are regular customers, so there is no requirement of any funding from the banks and all. So it's a regular kind of a trade which we do for export as well as import. So natural hedge happens in our case.
Okay. And my next question is whether PLI scheme is applicable to you and you are selected for that, or it is not at all considered?
PLI?
PLI scheme.
What is that? Can you just come up?
So we will be qualifying for PLI schemes for our greenfield plants of ethanol in Madhya Pradesh as well as Assam. So once the production starts, we will be qualifying for the PLI schemes.
You have made an application and you have been qualified?
No, we have made an application. We are still waiting to get the registrations confirmed.
Okay, good.
Yeah.
But we see, I just wanted to add over here that we have already have a ISS approval from DFPD for our bank funding, some loan funding for both the projects in place. So because of that, our funding is half of the cost of which will be charged by the banks. So we have already in place the ISS incentive.
Okay.
Yeah.
No, this PLI scheme will benefit by getting additional incentives from Prime Minister.
Yeah, we'll be going for that. Once in a few months from down the line, we'll definitely go for filing the applications with the respective government department and we'll go for the benefit. We'll go for the benefits.
Because there will be a substantial incremental increase in your turnovers and other things because of the expansions. That will be a big beneficiary for the company.
Definitely, sir. Definitely.
Yeah, absolutely. In fact, that way, both the states where we have chosen, we are very well cushioned by state and central incentives, which we are not considering in our margins at all. So yeah, when that comes through, definitely that is going to cushion us and comfort us. Yeah.
Okay. But as far as the share price is considering, there's a decline in the share market price, which is coming near to your 52-week low or something like that because of quarter on quarter the performance and other things. Hopefully, there should be a big U-turn.
Yes, it should be positive.
We are hopeful.
Okay. Thank you, ma'am. All the best.
Thank you so much.
Thank you very much, sir.
Yeah.
Ladies and gentlemen, we take the last question from the line of Mr. Aditya from Securities Investment Management Company. Please go ahead, sir.
Yeah, hi ma'am. Thanks for the follow-up. Just one question. We have announced capacity expansion of our grain processing by 20%, and some of our peers have also announced capacity expansion in this area to produce sorbitol and other starch derivatives. So just wanted to understand if there is enough demand for these products in India to absorb these capacities.
Yes, actually it is a growing market. Starch market is a growing market in the country. And, as I stated earlier also, for one product like maize starch, which is directly linked to the craft paper industry, which is linked to the e-commerce boom. So all these things align to each other. There is definitely scope for new capacities to come up. And you see a lot of people are also exporting starch to other countries. So when the domestic market builds up, we will not require to export also. Right now a lot of export is also happening. So definitely there is scope for the market to grow, to expand.
Right. And are any imports coming in from other countries to satisfy domestic demand?
For which product?
Or starch derivatives?
The products that we are manufacturing, no.
Okay.
They are completely being manufactured in the country.
Oh, okay. Yeah, thank you.
Thank you very much. Ladies and gentlemen, that was the last question for the day. I would now like to hand the conference over to Mr. Nitin Awasthi for closing comments. Thank you, and over to you, sir.
I would like to thank all the participants for their participation and the time they have given today for the call. And once more, I would like to thank the company for giving us the opportunity to host them. With that, I would like to conclude the call.
Thank you. Thank you, everyone.
Thank you. Thank you.
Thank you. On behalf of InCred Equities, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.
Thank you.